In the past 24 hours, the crypto market has sold down. The crypto market is seeing double-digit negative. But if we change to an hourly basis, is that any different? Yes, it is. Don't let the red force you out of the market. The red actually puts you on the right side of the percentage. This is where an understanding of Rule 359 is incredibly important, be on the right side of the percentage. It's very easy to buy when the days are green, but the days to buy are actually when it's red. It's good to remember the price is always moving in waves. That's Rule 4. It's a powerful, powerful rule. A lot of people are trying to figure out what caused the crypto market to sell down. On the front page of the Wall Street Journal, US exchanges list more than a dozen cryptos the SEC says are illegal to sell. You have to be really careful when it comes to news stories. This little chart here makes it seem like there's so many cryptos out of all of the cryptos that are illegal to sell. Please be very, very careful on just adopting news headlines. So how many cryptos are there inside the crypto market? That's an incredibly easy question to answer. There's 23,979. That's such a good figure. Let me pop it into the calculator. When we're looking here, just as a ballpark, that's probably around 20%. That is, that shaded area, let's say it's around 20%. Let's get an understanding of how many particular cryptos are illegal, according to the SEC. So if we just put 0.2, which is 20%, 20 on 100, we can see the answer is about 4,800. So we're looking for something around 4,000 plus. Let's have a look. How many do they actually say? Well, we can't see it yet. What about this? Oh, they've identified 76 cryptos considered to be secure. Hang on a second. We're getting a bit of a mismatch here, aren't we? And this is the thing that you need to keep your eye on. When you're looking at news articles, the only headline is a sensational one. Let's do some fun math. 76 divided by 23,979 and get it to a percentage basis. How much is that? Oh my goodness, it's 0.31 of 1%. You could say 1/3 of 1%. Wow, what a song and dance act is going on here. One thing to also understand, the SEC is trying to win the court of public opinion. The lawsuit between the SEC and XRP is still currently in process. And the Ripple team has spent $200 million on its legal defense. You'll notice that FTT and Luna in here, and when we look at both of these things, they've just popped up recently. The SEC, based on saying that crypto, 1/3 of 1%, it's not even 1%, it's 1/3 of 1%, are securities. But hang on a tick, XRP and Algo, EOS, these are fairly substantial. But what about the other ones? I would imagine they'd be pretty substantial too. Not really. They're absolutely tiny things that nobody has heard much, if anything, about. But it didn't stop it from making front page news. And look at this particular graphic. How misleading is that? Well, it certainly would sell the newspaper. Why does the SEC even care about this? Well, it's pretty obvious. XRP with a current value of nearly $24 billion. The SEC says that money should be in the stock market. And Jerome Powell is saying, no, that money should be in the banking system. It shouldn't be outside the banking system. The banks are petrified that people can actually control their own funds. How could they? The people don't deserve that kind of power. You can't be your own bank. That's what banks are for. As a professional investor and a professional trader, it's very important to look at the news with a critical mindset. You want to make sure that the numbers stack up. Use your logic and go through and see if the numbers balance the headline, and often they don't. There's also concern about the debt ceiling and a lot of other things. Please be aware that the debt ceiling will resolve itself. It's just politicians doing what politicians do. The debt ceiling in the US is ever increasing, and it's the same in other countries. Debt drives economies in terms of boom and bust. On episode 888, well, it's a pretty good idea to share rule 888. So the CTKS method shows true price action. When we look at a chart, it tells us its own news story. Not all charts are created equal. Tier 1 charts such as the S&P 500, NASDAQ, VIX, DXY, Bitcoin Gold, US oil, junk bonds, the US 10-year, they're really, really important charts. They literally move global markets. If you ignore Tier 1 charts, you're already in trouble. And the thing to understand, all these Tier 1 charts move together like an ever-changing jigsaw puzzle. The crypto market tends to feel things first. That's why it's incredibly important to track Bitcoin. And that is exactly why Bitcoin is a Tier 1 chart. The CTKS method service will be released in the next 24 hours. All Tier 1 charts have accompanying videos that explain how the chart is moving. There's overwhelming positive sentiment in the news at the top of bull markets and overwhelming negative sentiment at the bottom of bear markets. Tier 1 charts tell you so much. We're going to look through them. We assess risk on activity through junk bonds, and here we've used the CTKS method to mark up junk bonds from 1912 to the current time. Junk bonds are currently 91.45, and we can see a lot of overhead smart money sell areas are coming into activity. That means the market could be suppressed. The first level is 91.95 to 92.08. The DXY is incredibly important to look at. It's a major driver of so many charts, and here we've marked up the DXY from 1967. When financial markets come under pressure, it's very common to see the DXY spiking up. The DXY is currently 101.388. It has a smart money support level below it between 101.355 and 101.305. And you can see there's a bit of a fresh air gap, and these fresh air gaps can be filled very quickly. That's the issue with fresh air gaps. The next smart money sell level is between 101.713 and 101.786. These Tier 1 charts are like a jigsaw puzzle. You must be able to put the pieces together and understand them. Tier 1 charts inside the CTKS method service are explained in video. The NASDAQ, the technological indice of the US market, we can see marked up from 1973 with the CTKS method. We can also see that the NASDAQ closed out at 12,256. And we can see this heavy smart money sell resistance between 12,270 and 12,362 is weighing on the NASDAQ. It has not had much success getting through it in the past. Gold and Bitcoin act as flights to safety, as does the DXY. But the DXY has a relationship with yields that can impinge on gold's behavior, especially when it impacts real rates. Gold is currently 2021, and it's being suppressed by a smart money sell level from 2020 to 2025. You can see that gold is mildly bullish. The VIX is the fear gauge of the market, and here we can see the VIX marked up from 1990. The VIX is currently really low at 16.96. The CTKS method service will give you a full month view on where the VIX could be going. What we do in the daily channel is just look at one day at a time. The CTKS method gives you X-ray vision inside financial markets. It reduces the stress when trading and investing, and the one thing that we notice with the VIX, this smart money sell level between 1760 and 1799 has been very well respected. We're going to go through some more of these Tier 1s, but they're very important to know and comprehend what they actually mean and what they do to the market. They all work together like a big jigsaw. Bitcoin, like junk bonds, gives us some very, very powerful risk-on and risk-off signals. One thing that you will see time and time again inside pretty much every chart, price moves between smart money buy levels and sell levels and oscillates around. If it can't hold one, it will go down to the next one and come back and retest the one above it. Except, of course, if we get climactic sell-offs. Those things can happen, but just don't focus on that because it's not normal. It's not normal price action. We have to just maintain a cool, calm, and collected attitude inside financial markets. Bitcoin is currently 27,757, and we can see that smart money sell area above it from 27,877 to 28,174. Remember that these levels come from Bitcoin getting marked up from 2009, not just the past couple of weeks or even the past couple of days. Inside the service, as this is a tier 1, you'll get an actual video explaining how the levels are interrelated and interacting with each other. I'd like to give you a bit of a bonus. Let's have a look at silver. Silver is a tier 2. It doesn't have a video inside the service, it just has the levels, but it's looking really interesting. Only tier 1s get the video. Here, silver is marked up with the CTKS method dating all the way back to 1802. What you're looking at, these bands, these Stanfield zones, which are smart money buy and sell zones, are actually based on all of the price history of silver, not just recent indicative price, which will RIP your money. Silver closed out at 25.54. It does have a lot of overhead resistance in this area, and that's something that you will see only inside the CTKS method service, the strength of these different zones. We can see from between 25.76 to 25.90, it can be a little bit difficult for silver to get through there. And what do we always notice? Price is always ping-ponging between different support zones and resistance zones. This is true support and true resistance because it uncovers objective dynamic market structure, or ODMS. These are the only support and resistance levels you'll ever need to know. And the beautiful thing is that you can do it yourself by learning the CTKS method. And that will help you to become your own financial advisor. If you're interested in the CTKS method service, just come across to ctksmethod.org. The CTKS method is the world's most advanced smart money buy level and sell level detection system, and it updates 270 plus years of candlestick pattern analysis. If you would like to lock in your foundation member discount, just come down to here and send an email through. I'll be contacting people who have done that in the next 24 hours. If you've already done it, you're on the list. The foundation membership discount gives you the service at $39 per month. Then that's as long as you want to keep your membership up for. If you haven't used this form yet and you would like to lock in that very, very significant discount, please hop across to ctksmethod.org. I don't want you to miss out. One thing that I've just seen, the DXY is starting to take off. We know that there's a fresh air gap here. Without the CTKS method, you would not know this. There's a lot of negative news out there. After all, we're pretty much at the bottom of a bear market. We can get volatility in both directions, and we can see the shorts are piling into Bitcoin. But if the longs come in and start liquidating them, those shorts are going to get smashed. That would cause an upward surge in price. When the longs get smashed from the shorts, we see these breakdowns in price. The longs and shorts are always liquidating each other. Days like today are very good in terms of your daily three-dimensional risk management. Always remember, you control the trade or investment, but the market controls the returns. And those returns are always based on your active learning, your knowledge plus your courage. The market always penalizes blame and gambling. The market simply exists to transfer wealth between the desynchronized to the synchronized. And everybody gets synchronized at times and desynchronized at other times. It's all a desynchronization event or a synchronization event when it comes to profit or loss. One thing that I always say, when we do our CTKS code, we're looking at how the market could go in the next 24 hours. We're planning out, if price moves against us, what will we do? If price goes nowhere, what will we do? If price goes up, what will we do? We think about these 3 dimensions every single day. Because if we don't, we're going to get caught on the wrong side of the percentage. And we know price is always moving in a wave, so there's always a chance and opportunity to enter or re-enter. But the real key is understanding how these tier 1 charts are moving, what they're actually doing, what they're projected to do for the month, where the real and true support and resistance from a smart money perspective resides in those charts. And then you will form a picture of the jigsaw puzzle that is financial markets. What you will find, the news doesn't tell the story of financial markets. The charts tell the news of financial markets, the real news. The charts will tell you the real news that's happening inside financial markets. That's why Rule 173 is so important. Be independent from the news. And the only good news story is a really sensational one. And the sensational ones are generally impacting fear. Fear of missing out or fear, uncertainty and doubt. Always look at the charts, the price action, as your guide to what the news truly is. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.